Get into crypto because crypto is for the
Don't
people.
Trade stocks.
It's for the people, by the people. And so that's another thing to point out about UST is that, in my opinion, the founder of UST is really, he's really about the people. He's really about what crypto offers people as a whole, and it's collective, and it pays 20%. So.
Biggs and Boggs.
Ladies and gentlemen, welcome back to Your Future Hand with Biggs and Boggs. I'm Marty Boggs.
And I'm Julian Biggs.
That's Julian Biggs. And we got Spencer on sound and screens.
Spencer.
Thank you very much for joining us, folks. We really appreciate it. Share, like, and subscribe. Join the community. Let's get into it. Do the things. Let's get right into it. What are we up to today, and how can we plan for tomorrow? Julian?
Thanks, Marty. The same thing we're up to every day. Trying to take over the world. No, we're looking at crypto today. We're going to join the conversation again. We're looking at what the stock market did. We're going to talk about stable coins, but first we're going to get into a bit of a market scope. So let's do it.
Market scope.
So right now,
I want to get rich quick.
Again, looking at the Bitcoin versus US dollar chart on the daily time frame, got it zoomed out a bit today. So this is the area, in my opinion, where your Bitcoin or retailer in general, Bitcoin is being taken. This is where people are getting really scared, starting to sell out of their positions, where you are in technically bearish territory or corrective territory, as they would call it. So I've got it zoomed out, and I'm looking at the areas of major trading volume and where they've taken liquidity in previous months and in last year's cycle. So this is where we are now, is in this same range where there was a lot of liquidity, and we've got a lot of leveraged longs getting liquidated to the downside, and then a lot of these leveraged short positions getting stopped out or liquidated towards the upside. So I'm going to zoom in a bit here. These are some of the same areas that we are seeing now. And following that Fed meeting last week, we saw just that massive pump into that area of liquidity where the volatility and the trade volume massively increased, and they swept up a lot of Bitcoin there. So,
which means a lot of people have orders sitting there waiting.
Exactly. So when there's a lot of liquidity, it means there's either a lot of stop losses in that area. There's a lot of liquidation prices from leveraged longs or leveraged shorts, whichever the direction may be, or limit orders in place. And generally, the market makers is what we're going to call them. So people that direct the market with either large sells or large buys, pushing the price to the areas where there is liquidity in the charts or on the books,
so they can scoop it up.
Exactly. So we saw that twice there this week. So we saw that happen day one of that Fed meeting, and then again we had a bullish close Friday for the S&P 500. So the stock market closed bullish, and we had a little bit of a reaction to that Saturday where we got back into that liquidity area again. So this is what I'm looking at, but we also got to remain aware that we got some liquidity underneath these areas. So I do imagine they're going to try and take advantage of that again. So I wouldn't be surprised by a quick dump back to $35,000 to start the week, if not even a little bit lower, before we saw a real test of this resistance line we've been facing since the top, now coming in contact with the 20-day moving average as well. So that's what I'm looking at now. I think we're going to see that test of the liquidity underneath us after we've soaked up some of this liquidity in the top of the range. So that's what I'm looking at this week. I
want to keep an eye on whether we're going to break that line or not this week. If we don't break that line this week, then we're keeping an eye on it to see whether we break it next week.
Yeah, and so there's going to be, there's always going to be the three major lines. EMAs is what the business model is what the stock market uses. It's what big money uses. So they're watching these EMAs as well. But with crypto, we can see where there's orders on the book. So we know where there's limit orders in place. We know where there's stop losses in place. And they know that as well. And they're always going to push the price toward it, whether it's up or down. So, yeah. That's what we're watching. So that's why we dollar cost average, because it's really hard for new investors or retailers to time the market or time these things. So
unless you're trading, it doesn't really make a difference. Dollar cost average, and you're good to go.
Yeah. So that's it for that chart. But we wanted to talk about stable coins a bit today too. So, now that we are in kind of more of a sideways trading range, I mean, in my opinion, we're really trading sideways just with a higher volatility rate in crypto and in Bitcoin. So I mean,
I think personally in general, if you are invested in crypto whatsoever, your portfolio should be somewhat divided into stable coins or stable coins.
Stable coins.
Stable coins.
We got Bitcoin and stable
coins. Get your stable coins here. Get your stable coins.
That's like canned corn. It lasts longer.
Yeah, it's exactly what it is. Great analogy, Julian. Great analogy. Stable coins last longer. They're canned.
Stable coins.
So, but honestly, no, you should have some stable coins in your portfolio regardless of where the price of Bitcoin is. So something that if you're not paying attention to and don't know much about, then yeah, let's look into that. Stable coins. You should be holding whatever exchange or wallet you're holding your crypto on. You should be able to hold stable coins of some kind. Personally, I've been holding USDT, but I think maybe that's going to change. Maybe. What do you think, Julian?
I think you should. So I am now moving towards UST. UST was the founder of UST is from South Korea. It's out of the U.S. jurisdiction of the SEC. So I know that they've tried to subpoena the founder of UST, and he's basically rejected that and countersued them because they don't have jurisdiction there. So now we've got USDT and USDC, which were the primary stable coins here before, under pretty high scrutiny from the SEC and regulators because it really poses a threat to not only the US dollar, but to bonds and bond yields and things like that as well.
The traditional stock market.
Right. So we're seeing a decrease in the rate of interest paid on the stable coins available.
Which I'd love to see. Fuck, the stock market pisses me off.
Yeah, it's terrible.
Why do we trade that shit, man? That's so stupid.
It's terrible.
So bad. Trade crypto, bro. Trade
crypto. Get into crypto because crypto is for the people.
Don't trade stocks.
It's for the people, by the people. And so that's another thing to point out about UST is that, in my opinion, the founder of UST is really he's really about the people. He's really about what crypto offers people as a whole, and it's collective, and it pays 20%. So if you put $1,000 into UST, you're going to make $200 a year just to have your money sitting there, and it's going to be tethered to the dollar still, and it's never going to be above or below whatever the value of the US dollar is currently. And you're going to make 20% interest. So eventually,
everybody believes in the US dollar. Like it's still, obviously, it's not going anywhere. People think that Bitcoin's going to take over, crypto's going to take over completely. I don't think that's the case. The US dollar will be forever a thing that everyone will use and probably compare shit to, but
it
has its place.
It'll transition to a digital dollar.
Exactly. It will transition to a stable coin.
Yeah. The fiat system we know is done.
Yeah.
10, 15 years, 20.
Yeah.
I don't even think it'll take that long.
But we still need that platform of people understandability.
Stable coins, whether it's stable coins or CBDCs, some sort of
something that doesn't fluctuate, basically, right? People want something that is if you look, a lot of people don't know this. Blows my mind that the U.S. dollar obviously does fluctuate in value. That's why your house is worth more this year than it was last year. That's because of the dollar, not because your house changed. Your house is the same thing. It's the dollar that changed, but anyways, it's less flexible or less volatile than Bitcoin and stuff like that, which is a little bit easier for people to grasp, which was why it has its place. But hopefully with obviously the future and less inflation type situations, we can begin to stabilize a stable coin.
Yeah, exactly.
Right.
So right now, for us planning our future hand, again, this is not financial advice, but we're going to share with you what we're doing in the crypto space. So right now, personally, I'm only focused on Bitcoin because Bitcoin is the driver of this market, and I'm going to continue to dollar cost average into Bitcoin positions, and as well as now holding my excess funds or my excess net in a stable coin, earning that 20% with UST. It's gonna be really good. Dollar cost average into Bitcoin. We know that Bitcoin's gonna pump first, and then we could possibly, when we feel that euphoric state of the market, we can start to dissolve some of those profits into the altcoin positions because they get their run-ups after. So if we do see a reversal and in the market start to trend back up to all-time highs again, which I think will happen, whether that's a month or 2 months down the road or possibly even Q3. I think it's going to happen this month where we take 50K again on Bitcoin. and possibly those all-time highs. So that's when we would possibly take our profits from Bitcoin and dissolve into some of the altcoins, because we see that trickle effect from Bitcoin into the alt. So that's how I'm planning for my future hand right now. I'm only focused on Bitcoin at dollar cost averaging into Bitcoin. I personally trade it as well, but yeah, well, maybe we'll get into some trading another time. But
yeah, what are you guys up to? Let us know. Are you trading? Are you holding? Are you
hodling?
Are you hodling?
Yeah, let us know in the comments. I mean, so we're entering some technically bearish territory, or potentially a more corrective phase where we trade sideways a bit. So we're really just going to try to accumulate and continue the conversation and build our portfolios, because this is where we really have that opportunity to build our portfolios and stack sats and stack up on the projects.
This is when people get all like, you know what? I really like that Bitcoin, but it's let me down lately.
Yeah.
And it's like, I used to open my phone, I'd wake up in the morning and I'd check the charts, but they're just so depressing. I don't want to look at it anymore.
Yeah.
I don't want to look.
Yeah.
I can't do it. Yeah. I just saw a video of a dog just running across a football field, and that made me feel real good. So I'm going to start watching dog videos.
Did you see that one of the cat doing sit-ups? Did you see the cat doing sit-ups?
I saw the squirrel scuba dive. And I said, Bitcoin, sorry, it's over.
Yeah, it's dead. Anyway, yeah. So this is where you're going to make some money. You're going to want to accumulate as much as possible before we go into another run-up phase.
Don't lose attention. Pay attention, and you'll get paid.
In Bitcoin.
In Bitcorn.
Bitcoin. All right. I think that's it for today.
Enough of this antics.
Biggs and Boggs out.
Peace.
Biggs and Boggs.